debt ceiling default talk and how it can affect the real estate market. Happy Monday. Hopefully you're having an amazing Monday. It is beautiful. It is sunny in the Chicagoland area. And it's actually my mom's birthday today. So we're still going to be here doing Chris's Corner live Monday, answering some real estate related questions, even though it's my mom's birthday. We just had a great lunch. It was a good time for her. So let's talk about what can happen if the U.S. defaults on these debt ceiling talks and how it can impact the housing market. This is kind of all the buzz right now. You're hearing a lot of it on the news about debt, raising the debt ceiling. If you don't really know what that means or what that's about, basically, if you don't know, I think everybody knows how much debt the U.S. is in order to, I guess, fund the government, fund a lot of things that we do. And basically what's going on now is they have to come to an agreement to raise the debt ceiling, raise how much the U.S. can borrow in order to continue to basically operate. Now, a lot of people are saying that if there is a default in the debt ceiling, that it's going to have basically a ripple effect in the housing market. Now, basically, if we can't come to an agreement, short term, we really don't see much happening. Mortgage rates aren't very volatile in the short term. Now, long term, if we're looking at it, if we have a long default, let's say we can't come into an agreement within a couple weeks, we might see a ripple effect in the housing market, meaning interest rates. So let's say we go into default for a couple weeks, the government can't agree on what they're going to do. We might see mortgage rates start to increase, right? Because what does that mean? That means a U.S. is not as reliable to borrow money. It means that to borrow money here, at least to buy a property, buy housing, it's going to be a little bit more expensive because we're not as reliable. We're not as, I guess, responsible with our money as we should be. So I think I saw something on Zillow where they expect interest rates to go to 8%. It could happen, it could go to 8%, it could go higher if we really don't have the funds, if our government doesn't have the funds, and it can have a ripple effect on the housing market. I don't see, the only way I see that happening is if we default for longer than, a couple weeks, right? If we default, we can't come to an agreement in the short term for a few days, maybe a week. I don't think we're going to see a huge jump in interest rates. Right now, we're hovering around 6.25. Seeing us go to a 6.25 and 8 would be huge. It would be a huge jump. We're definitely going to see a lot of buyers come out of the market. We're going to see less buyer demand in real estate, in the housing market, which is going to make prices probably go down a little bit. Now, if we see a default longer than a couple weeks, that definitely is something that could happen. Again, I can't tell the future. I don't know what's going to happen. I don't know what's again, I'm not really into politics, but these are kind of the scenarios that could happen if we don't come to agreement, if the government doesn't come into an agreement about raising the debt ceiling. So if you're hearing all over this in the news and you're kind of wondering what could it do in terms of the housing market, right? If we don't come into agreement on what the government is going to do with the debt ceiling, we could see mortgage rates start to increase, which is going to affect the buyer pools who are looking to buy property right now, and of course the sellers too, because it's not going to be as hot for buyers looking for properties. That means sellers are probably not going to be able to get the scorching hot prices that they've been getting recently. Now, if they come to agreement, I don't really see much change happening with interest rates or the housing market. Again, this is only if there's no progression with the U.S. debt ceiling talks. Again, this is just some background. I don't go too deep in the details because myself, I don't know too much about it, but just the general impact of what it could have if we go into default and if this does become a strain on the housing market. These are just some scenarios that could happen. I keep hearing a lot about it. People are asking questions about it. What happens? What's this debt ceiling talk? How does it affect real estate? What happens if they don't come into an agreement? We can see interest rates go up. We can see the housing market buyer demand go down a little bit. That's kind of the short-term view of things. So hopefully that answers some questions on what this debt ceiling talk is about, what can happen, how can it affect real estate. So that was kind of a brief overview. We'll see what happens. Again, I can't predict the future. All I can do is kind of see what we're showing, give you the data, and kind of go from there. So hopefully you're having a good Monday, though. It's a beautiful week. We finally are getting into the end of May, coming into June. So hopefully you're having an amazing week. If you have any questions at all, feel free to send us a message. We'll be happy to answer them next week on Chris's Corner with any questions you have real estate related. Otherwise, enjoy the day. Have an awesome week. Try to do the best that you can this week and enjoy the Monday.